What is the biggest thing that signals single family home opportunity? We're going to jump into that on today's podcast. It has to do with multifamily.
Hi, accredited investors. Hey, I'm so excited. We got a new deal right now. It's a 46 unit building, brick, solid brick, in the race horse capital of the world, Lexington, Kentucky. Rents on this thing, they're 15% below what the market rate is around it. I know because we own several buildings in the area. We're buying this one 15% less. To learn more, all you have to do is go to homeinvest.com or click on the description down below. Inside the description, you'll see a link down there. Remember, always consult with a tax advisor, a financial planner, or attorney before making any investment decisions. Having said all that, all you have to do is go to homeinvest.com or click on the link that you'll find down in the description down below. Thanks, God bless. Enjoy the show.
If you're new to the show, my name is Steve Warner. I'm the Chief Revenue Officer. I'm joined today by Nate Armstrong, the founder and CEO of Home Invest. We are an Inc. 500 company focusing on helping you be great stewards of what God has given you, reach financial freedom, and create a legacy for your children's children. Nate, how are you doing this afternoon?
Excellent, man. Excellent. Got a lot to talk about today with these foreclosures popping around us.
Okay, so we are actually talking about commercial foreclosures. Right now, it has jumped more than 117%, more than 400% in California. Nate, what does this mean for the real estate market? Let's talk about that first in multifamily.
Yeah, so let me define commercial first for everyone. So commercial is anything that's 5 units or more on the residential side. So when you're looking at a duplex, a triplex, or a 4 unit, that would not count. That would be considered just standard residential. But if you look at an apartment building that's 5 units or more, that's technically commercial. Office space is commercial. Car washes are commercial. We've owned all of those asset classes over the years, but right now, where these staggering 405% increase in foreclosures type numbers are coming from is the commercial sector. So offices in some multifamily.
Offices and some multifamily. Why is it up so high in California, Nate? Any idea?
I won't go too political on you, Steve, but I'm just going to say the governor in the state of California has driven an exodus of business. A lot of wealthy business owners have decided to uproot and leave California because of some of the policies that are going on, high taxes, high crime. It's a refugee state. A lot of immigrants have fled to California, and you've got homelessness problems, you've got crime through the roof. So a lot of the storefronts are unfortunately sitting vacant in big cities in California. So that's my suspicion on why.
Okay, so we know that commercial foreclosures are going up. What does this signal when it comes to single family houses?
Yeah, it's interesting because a lot of people will say we're never going to have a crash on single family. You've probably even heard it. Think about this yourself at home or wherever you're catching this podcast. Have you seen the mainstream media say we have an inventory shortage? We're never going to have a housing crash. You probably heard the narrative around that. The real stats show that we're about 3 million houses short nationwide. And once those 3 million houses return to the market, then all of a sudden we're no longer in a shortage. Now we have oversupply issues. Look at the state of Florida as an example. Look at the state of Texas as an example, especially areas like Austin, Fort Myers, Tampa, etc. Those cities and those states, they have a glut of inventory coming on the market, and it keeps pounding and piling up every single day. Prices are dropping left and right. So back to your real question, Steve, like what does it mean for the whole like residential market? The residential market is trailing the commercial market. It's trailing it. I would guess it's about 9 months, maybe 12 months behind it. But right now we're in the middle of the commercial downturn. And the next one that will come probably right after the elections is the residential downturn.
Yeah, I think so too. There are a couple things talking about the election. This is an election year. What are they doing to prop up single family during elections, Nate?
That's the other interesting thing. This is like one of those dirty secrets that you don't want to know, but it's actually happening right now. VA foreclosures. Well, I can't even say foreclosures because they banned them. They banned VA, any VA loan, they banned foreclosing on it until after the elections. FHA loans, which account for the most vulnerable of all loans that are out there. It's usually first-time home buyers taking out FHA loans. FHA loans right now, they also have a Band-Aid program. Not quite as drastic as the VA program where you just cannot foreclose, but the FHA program, they actually will allow you to reduce your payment by 25% right now. All you got to do is apply for it and you can get 25% reduction until just after the election. So there's a lot of Band-Aids on foreclosures in general right now happening that are expiring right after the elections are done.
Okay, Nate, so let's tie this all into if you're looking to invest in real estate, whether it is passively through multifamily or whether you're an active single family investor, what does all of this mean for somebody who is an active investor? Should they go out and get something right now? Are deals starting to come more plentifully? Should they wait a little bit? I think a lot of people are still sitting on the sidelines with cash. What do you think people should do if they're looking to invest right now?
I had that same question posed to me yesterday from a SpaceX engineer. He's staying with us until tonight. And he said, hey, I got some cash. Where should I put it? Like, what's the safe play right now? And I went through the multifamily stats with him. I also went through the single family stats with them. And I said, hey, if you'd like to do single family, just know that you're buying towards the top of the market, if not the top of the market. And we're going to see a downward spiral on prices. Now, it's not true in every single city. Like, I'll even give you an example, like, because you might be listening to this podcast at home and you might say, Nate, that's not true. My city's on fire. It's still going up. In the state of Florida, for example, my area, which is Southwest Florida, prices are spiraling down right now, like out of control, going down really fast. Whereas if you compare that to the capital, Tallahassee's still going up. They have a shortage of inventory. So it's not going to be globally, but I'm just saying from a national trend, when inventory starts to increase a lot, prices start to go down. So I was showing the SpaceX engineer that. I went through all the details with them. I said, you can certainly jump into the single stuff. Just know that you're buying at the top. As long as you're cool holding for the long term, then you'll be okay. But if you're planning to buy it and then sell it in 2 or 3 years, it wouldn't be a smart play. Compare that instead to multifamily. Remember, we started this episode, Steve was going through the stats with us all. 167% increase in commercial foreclosures, 405% increase in California commercial foreclosures. Whenever you see staggering numbers like that in a certain class of real estate, which is commercial in this context, that's the opportunity. When banks are foreclosing on properties, that is the opportunity for us to step in and buy them for pennies on the dollar. So if you're going after commercial foreclosures, I explained this to my SpaceX engineer friend, commercial is the opportunity right now. That's where you can get the biggest bang for your buck, buy at the lowest cost basis, and you partner with other people to do that. It's a team sport. It's not just, trying to go out there and take it all down by yourself.
Well, Nate, in that vein, right now we have like $45 million in properties that we are working on fundraising for because we've had so many amazing deals come through. I mean, are we just seeing the start of this in multifamily? And how do you make sure that you're not buying into something that's going to become a foreclosure?
Yeah, great question. We are just seeing the start in some cities, but multifamily, it's only dipped twice in 20 years. One time was in 2009, and it was an 11-month dip. It's really short in the grand scheme of things. Like it hit the bottom and immediately came back up. And now since November 2023, we've been in another dip cycle for multifamily real estate. I suspect that by November 2024, multifamily will be right back up there again. It's a safe haven. People know that when the economy gets tough, it's kind of like gold. They can sink their money into a nice piece of multifamily because they know that people are always going to pay rent, regardless of what's going on in the economy. So will it be there forever? Yeah, multifamily deals will be out there forever. But if you want to get the killer deals, like the deals that we're seeing right now, this is the window to act. This is the time to go out there and grab them. Of the 42 million that you just mentioned, Steve, as an example, this isn't a done deal yet, but God willing, we've already funded the first 34 million of it that's closing. Like we have an equity group that has already verbally committed $8 million equity. We have a lender that committed 22 million. And then we have another private husband and wife individuals that committed 3 million. So that would constitute the majority of the first 34 million. So these deals, like when you bring a killer deal forward like these, they fill up really fast.
Nice. Now, the last piece of this I laid out, the question was, what can you do to make sure that you're not getting into a bad deal? I know I get approached from investors all the time. They say, well, if there's so many foreclosures in the market, how do I make sure that I'm not part of it? There are three key guidelines that I will give you. The first one is make sure that you are investing in C-class properties right now. You don't want to be doing development properties. You don't want to be doing office buildings. You want to be in solid C-class properties. C-class properties do really, really well during recessions, and they do well outside of recessions. It's solid, like working class housing for the every person. It's not crazy expensive. It doesn't have all the amenities. It's where everybody moves into when the economy gets a little bit tight. That's the first rule of thumb. The second rule of thumb that you want to make sure of is make sure that the person that you're doing the syndication with has experience during a downturn. If they made it through 08, 09, 2010, they know what they're doing. They're still around. They went through a recession. That's something that you want to look for. And the third thing that you want to look out for is don't go with somebody who has flexible waterfalls. Flexible waterfalls means once the building starts really making income, they end up taking most of the profit and they leave you with a bare minimum return. Those are my three guidelines. If you want more, you can follow. We went through a whole podcast where we did a deep dive on the top 5 things to avoid. All right, Nate, anything to say before we jump out of here?
Yeah, there's deals. They're abundant right now. This is the window. This is probably the best window I've seen in my lifetime since 2009, really. So take action. If you're looking to take action on real estate, this is your chance right now.
Awesome. All right, guys, we will see you next time here on Purpose Driven Passive Profits. Remember, be great stewards of what God has given you, and we will see you soon.
Hi, accredited investors. Hey, I'm so excited. We got a new deal right now. It's a 46-unit building, brick, solid brick, in the racehorse capital of the world, Lexington, Kentucky. Rents on this thing, they're 15% below what the market rate is around it. I know because we own several buildings in the area. We're buying this one 15% less. To learn more, all you have to do is go to homeinvest.com or click on the description down below. Inside the description, you'll see a link down there. Remember, always consult with a tax advisor, a financial planner, or attorney before making any investment decisions. Having said all that, all you have to do is go to homeinvest.com or click on the link that you'll find down in the description down below. Thanks, God bless. Enjoy the show.